All right, what up, guys? Happy Sunday. Let's go get it. So, well, I I I don't know what's going on here. If I apologize, my screen was messed up. So we are buying the US dollar index for this week. Now, the US dollar index has gone up significantly after the interest rate decision, the 75 bips, 75 basis points rate. They do plan on raising rates for the upcoming session for November 2nd and December 14th. We have two more Fed meetings. So November 2nd. And if you guys don't know what's going on in November, we have midterms coming up. So we have midterm elections. November 2nd, they're supposed to raise rates again by 0.75, if not more, because their goal is to raise it close to 5% by next year. Things are starting to change rapidly in the economy. So with the US dollar gaining so much in value, look at the currency like Euro, Australia, New Zealand, Canada's currency. Japan's currency has taken a toll. The Chinese yuan has taken a toll. Every single currency that's fallen back against the greenback. And the greenback is a nickname short for the US dollar currency index. So I highly advise for you guys to pay attention to what's really happening in the markets, within the markets, not just looking at the charts and saying, oh, the US dollar is really strong and we're just going to keep buying the US dollar. Yeah, that is our plan. But always be mindful where things are being settled in within the central banking system, what the Federal Reserve is planning on doing for the United States. Also, we're not going to be the one getting hit first. I guarantee you, either Europe gets hit first, or either Japan or China. And so I don't want to dive in too much about a recession. I don't want to talk too much about a recession, but just pay close attention what's about to happen towards the end of this year here. We're coming into October 1st, which is this upcoming Saturday. There is no non-farm payroll for this week. Non-farm payroll would happen next Friday on the 7th of October. So let's go back here. We are buying the US dollar index. Major move at 113. Probably just gonna keep going up. I don't foresee US dollar making a substantial reversal going back down. I don't see that, especially for this currency index, especially comparing it to USD JPY, right? And I'm talking a lot about this pair because Japan has taken a toll on their currency. The Bank of Japan doesn't even know what they plan on doing. They were talking about purchasing liquidity assets and also maybe stocks and bonds, and there isn't really a whole lot going on for the economy for Japan right now. So I'm going to go back to US 30 here and all the indices. We are selling the indices. Indices have fallen down dramatically, after the interest rate decision and what the Federal Reserve has planned on doing. So, like, I'm going to reiterate this. November 2nd is another FOMC meeting, and then December 14th is the last meeting of the year. And like I said, by the end of December, they plan on going above 4.6%, and even up towards 5% federal funds rate. So be prepared what's going to happen with the banking system and how interest rates are going to fluctuate so fast and it having a big effect on the economy here, and also what the central banks are doing with the UK, with the European Central Bank, Reserve Bank of Australia, the Reserve Bank of New Zealand, and also Bank of Japan, right? Even what China is going to be doing, Bank of Canada. So it's a big toss up at this point because a lot of people don't see the speculation of what's happening. And if you guys see where I'm going with this, it's very important to see the future of a really crazy market crash. I just have to say that because I don't foresee a positive insight on any of the indices at all at this point. So Wall Street's going back down. I'm looking for it to come down 29,000 back to 28,000. S&P, looking for S&P to break the support price at 30. What is it? 36. Yeah, 3,600 down to 3,500. Looking for NASDAQ to break support at 11,200. I think this is, 11,200. all the way back down to 10,000. That's what I'd be looking at, breaking down 10,800 to 10,400. What's this one set at? 10,400? Yeah, 10,400. So that's the next move here I'd be looking at. Oil, I'm just looking at oil. Oil has broken beyond my weekly trend line and has closed out on the weekly trend line for the uptrend here. So this is a substantial move. I'm actually going to close out my horizontal lines because this is a really significant move here that I've been looking into. So massive move on the weekly trend here for breaking out outside of this uptrend back down to the downtrend here. So this is pretty awesome to see. And it's a matter of time for things to start switching around. UJ, we are buying UJ. What's going to be tricky at this point, this pair has not given up its gains. Every time it's gone down, it's gone significantly higher and higher. So looking for 146 to 148 and maybe a possible move to go above 150, breaking the currency of Japan for them to make a decision for the Bank of Japan to really look into raising rates and start buying liquidity assets or something to where they can accommodate to revive the economy for Japan. Okay, so, and this is really crucial because who knows what's really going to happen with the Bank of Japan and how they're going to intervene in these asset purchases in order to accommodate on reviving the economy, guys. The pound, a massive move down for the pound. So I've never seen the pound at this low of a low. So it is crazy low. We are going to be selling the pound and euro to the dollar. Looking for the pound to break 108 down to 106. Okay, and this is a substantial bearish downtrend for the pound. And I've never seen this before. Like I said, started, like I said, my years of trading way back in the end of 2016, December of 2016, and up until now, this is really crazy to see how bad this currency is going, right? And comparing to, we'll talk about your British pound here. So remember, when the pound is going down, the pound to the dollar is going down. This cross pair is really, really moving up, right? This is a pair that you would buy against the pound to the dollar, right? It's a great cross pair to go with. And I like trading this pair a lot, especially if the pound was to go down, which it did significantly. This pair is going to go up, which it did, right? It's at 89,262 closing on trading view here. And looking for it to break. We're buying this pair. And we're looking for Euro British pound to break 89,500 down up to 90. And so this is a pretty substantial move that I'd be looking to for it to keep going up here. Euro, massive move down under 96, under 97, right? It's at 96,868 on trading view here. Looking for it to break down to 96, down to 95, and maybe possible move to 94. Would not be surprised if Europe goes into a major crash before probably the first one to go first. I haven't seen anything like this, and I don't know if for those that have been following me for a while and those that are customers for me, clients for me, that have they ever seen, the value of euro going under $1 or even at this price. And this is pretty substantial, a crazy downtrend, and it's still downtrending. And like, there's no stopping this. And this is pretty crazy to see because we're at a turmoil, a really big level of uncertainty with the markets. And if the currencies there's no balance, right? There's no balance in any of the currencies, right? The US dollar is so high, right? The US dollar is so high, and everything that is going against the US dollar is really, really low, right? Really low. So hear me out here. I know some people don't foresee a recession. Some people don't see a depression. Some people don't see anything, major with these key components that are affecting the currencies that are involved, right? Currencies are involved with the central banking system, right? And what the central banks are even doing, right? They're talking about fighting inflation, but besides inflation, we're fighting other different aspects of the economy as well. So inflation is just one thing. So there's so many factors that are coming into play here, and me personally, I seriously think Europe is going to go down first, and then either Japan or back to the UK. Those are the three big countries that I'm looking at right now. That's going to get hit hard right away. United States would probably be the last country to get hit because of how high they inflated the US dollar already this year, since last year as well. So let's go down to USD Swiss. Buying USD Swiss franc up to 99, back to a to 1.0 here, $1 here. So I'll be looking at massive bullish move for USD Canada. US dollar to Canadian dollar. Canada is taking a toll. I mean, if you look at the prices of oil, Canada's main export is oil. So massive move down for oil prices. Canada's main export is oil. Bank of Canada doesn't know what they plan on doing to do anything to help out the economy. So let's look at this. I mean, USD CAD is going back up even higher. This is a major bullish move here for USD CAD, and I'm looking for it to break 137 to 138. And I don't think there's anything stopping this pair unless something major happens with the US dollar index or with the Federal Reserve that ties with the United States economy. So it's a lot of stuff to talk about. I'm talking and reiterating a lot of stuff because things are happening fast and rapidly, and we're coming into the end of 2022 here. We only have 3 months: October, November, and December. And we're coming into the last fourth quarter of what the Federal Reserve is going to be doing. We'll have two more Fed meetings, November 2nd and December 14th. And they plan on raising rates for each of those meetings. If not, it'd be a substantial raise, interest rate raise in November to go above 4%, because they're talking about 4.6, 4.4 to 4.6. But I highly doubt it's gonna stay there. It's gonna end up going up to 5%, if not higher. Okay. And so this is another crucial aspect into how they're trying to fight the inflation. But the real question is, what are they trying to cover up? Right. So I don't want to make it seem like that they're bad guys, but this ain't the first time we've seen history repeat itself, and this ain't gonna be the last time. So Australia and New Zealand going back down here. I'm not gonna talk about crypto. So yeah, because that's a whole different subject. We're selling both of these pairs, right? New Zealand has taken a massive toll. New Zealand is by far the weakest currency following the Australian dollar. So 57, this is crazy. It is almost coming down to 56 and 55. That's what I'd be targeting towards the end of the week here. Australia has gone down, not as significant as New Zealand, but it is the second weakest currency so far. So down to 65. I'm actually looking for it to come down to 64 to 63, and then we'll see what happens to the banking system out, the Bank of Australia and the Reserve Bank of New Zealand, what they plan on doing. And that's all I got for you. I know it's a long video, but I want to stretch this. I want to stretch this out even further for you guys to really understand, the highlights, the spotlight of what the central banks are trying to do and what the Federal Reserve here is trying to do in the United States. And also, looking in, if we go forward, right? If we were to go forward and look into the interest rates being raised twice, two more times, November and December, we have midterms coming up here. Democrats are trying to take approach into, taking over for 2024 here. So politics are in play, central banking systems are in play. Inflation has never gone down, hasn't even gone down. So, and now the US dollar has been inflated even higher. It's going to keep going. As sad as it is to say it, I would highly recommend start saving money. That's the big thing. That's the easy way I can say it. Start saving money, start having cash, having assets worth money. And we don't know how big this is going to impact the world, not just here. Okay, I'm not talking about what's going to happen here. What I'm talking about is what a global hit in the economy for each country here. So I don't want to scare nobody, but you have to be prepared of what's coming up for the future. And I would not be surprised, sometime next year we do start seeing things coming down rapidly. And I'm not talking about the prices of goods and services. I'm talking about what's going to happen with the banks, right? And so, and how they going to manage and control, the fluctuation when it does hit, going down, not going up and going down. And so I just want to make this, announcement. And also, there's a lot of YouTubers out there that's already been talking about this since last year, and how the Fed's been doing this, how the central bank's been doing this, and and what they've been trying to avoid. And I don't want to make it like, oh my gosh, we got a big global, like a big global epidemic or something coming up. This is not an epidemic. This deals with financial situations on every single level of each person, and also it goes back to the central banking system, and also with politics as well. So, just a quick reminder to just remind yourself that adapt to the markets at all times, right? Adapt to the markets and be mentally, not physically prepared, but be mentally prepared when the markets do come crashing down. And that is a big insight, for those that have seen it in 2007, 2008, and have been through it. Why would you want to go through the same scenario? And this might end up being a crazier scenario, right? What if this is like the biggest hurricane that's going to wipe out everybody, or the biggest earthquake that's going to, I'm trying to compare as a natural disaster that is a wake up call for the banking system, and also, for everyone that's not well prepared financially for this to happen. And I can't stress that enough, because I mean, yeah, we faced a pandemic in 2020. 2021, people are saying things are getting better. Now we're in 20 at the now we're coming to end a 2022, the year 2022, and it don't look like things are really getting better. And so I feel like there's a lot of cover ups in the banking system. There's too much, there's too much uncertainty, and then there's too much, price fluctuations with the currencies already. And if like I said, back to what I was saying, if the US dollar is this high and everything is down against the US dollar, like dramatically, like a dramatic downturn for every currency, something's got to drop, right? Even further, right? What's going to drop? I don't know. Maybe the housing market first. If not, maybe the stock exchange first. One of those two, right? If not, maybe the banks might fall first. Who knows? So, like I said, I'm not trying to scare nobody, but this is something that I've been following for quite some time. I was expecting a market crash or a really good recession to hit when Biden came in when he came in, and at the beginning of 2021, and didn't really see it, and then now it's like, holy crap, we're halfway through his term, and this is just the beginning. And what I mean by that is that this could be the phase two, because phase one, me personally, going back to all the phases, this could be the pandemic was phase one, right? Crashed it, they stimulated the economy, and now they're trying to do a really big, stimulation, right? Because how do you re-stimulate everything else is raise the cost of goods. But that doesn't make anything better. And so we have said everybody has to pay that price, but there is a price to pay at the end. And it ain't gonna everyone's gonna be paying that price at the end. I'm just saying that. But it depends who's paying the price the most. And as sad as it is to say it, it all falls back to the working class, and they always suffer the most. The working class always suffer the most, you know. And so that is another, another sector to pay attention to what's going to happen with unemployment and with the employment side. And I don't want to scare nobody, but this is a time coming. And whether you believe it or not, that's totally on you. But there's a lot of YouTubers that's been talking about this. And you like I said, the Federal Reserve can't hide anymore. You can't hide and say that everything's going to be okay if we were to jack up the rates for this amount of years and expect inflation to hit 2%, right, by the end of 2024. But what happens to during that time? You know, what does happen during that time? And I don't think people understand that. And so, but on that, happy Sunday. Go Packers. I hope Packers beat the Buccaneers. Other than that, that's all I got for you guys. I'll see you guys tomorrow. If you guys want my free book, let me know. Other than that, peace.